Hi everybody, this is David Marsh with Emini tradingstrategies.com. Today is December 9th, 2010. This is the first video I've done in a while. If any of you that are following my blog know that I try to put a video up every day or at least 3 or 4 times a week. I have a 7-month-old baby boy and he was pretty sick for the last week, so I had to attend to my family and just have not had time to put up a video. So I'm trying to get back in the swing. I know we had a one and done yesterday, and I know we had a one and done today. I was actually trading today for the first time, and let's kind of go over the trades here. First, before I talk about my trade, I want to talk about no zone. I do have a lot of students that simply trade the high probability normal system entry trades, which are the NSEs that are coming out of no zone. Not quite the way I trade. I'd like to take the first available trade. If I get my point profit, I'm done, I walk away. However, some of my students say, well, hey, when we get out of no zone, I don't mind waiting. I want to take that first NSE out of no zone because it is indeed a high probability trade. That's fine. Either way, if you did trade that way, you made your one and done. You're done about 10:05 or so in the morning. It is worth noting today is contract rollover date, so we're trading the March 2011 contract. So it's very slow, very low volume. In fact, some traders don't really trade that much today. They wait until tomorrow because you're still going to have a lot of volume on the December contract as people are closing out their trades and doing whatever it is that they're doing with their positions, while some open up and start trading the front month at 9:30 today at the opening bell like we did. So it is a very slow moving day. Now I took the first EET long. Okay, it's an aggressive trade but a good trade. It's got lower risk, better reward, so the risk reward is typically skewed in favor of profit, or biased I should say, in favor of profit. And I like the EET because we were in no zone. So I jumped on right here to quarter. These blue bars here are not the entry levels, that's just giving you the 2 fill bars, but I was filled right here at that blue line. Came down a few ticks, just about stopped me out, and decided to turn back around, give me my 4 ticks profit. And again, this hole right here took about 11 minutes, this complete trade. It's very, very slow. So I had a one and done, NSE at a no zone had a one and done, but I do want to point out the super EET. Now a super EET makes it super because the trade that follows would be the NSE out of no zone. So you've got a short trade on a faster chart on an EET, and what that will do is it will get you into the EET. I'm sorry, let me slow down. It will get you in the position of the next normal system entry before it happens. So the NSE happened right here, but the EET you'd have been in right about here. So the idea is to get a 3 to 5, 6 tick better fill, and the market moves down and you get that NSE short, you can ride it down even more and take the profits off the NSE. So you fill on the EET entry, and that's why it's called an early entry technique, and you stay in. That's a super EET. Well, that trade lost. It got a good fill. We got signal, it closed up here. You only risked 3 ticks on the trade, but it went right up, stopped you out, and then turned around and went down. So had it not stopped you out, it would have been a beautiful super EET because you'd have jumped in at 28.75 and market moved down to 24.75 or so, 25. Then would have been a great trade, but it did stop out. You lost 2 or 3 ticks if you were to continue trading, or if you're a trader that's trying to catch this trade. And if you did stop out, you simply grabbed the NSE short, and you really got short again, and you took it down and recovered off that trade. And that's where we are right now. And then I want to point out one more thing, because I haven't done a video in a while. We have another long EET, and you can see that it's been stopped out. Well, this is plotted on our screen because Pro Indicator version 2, which is our software that we use on the NinjaTrader 6.5 charting program, okay, it doesn't know any better, but this is not a valid trade. It's valid as far as what has to happen with price action for it to trigger, but my rules state that if we have a high probability trade, we would not trade against it. So this trade right here is a high probability trade. We're expecting the market to go down. Is it always going to happen? No, but this time it did. So in any event, we would avoid a long trade because we're expecting the market to go down, and that's exactly what it did. So even though it plots on your chart, it's because Pro Indicator version 2, again, simply plots all the trades for you. It doesn't know the rules and whether or not you take them or not. So it does plot the trade, but it was an avoided trade, so we saved ourselves a loser. And that's where we are right now, right about 10:30 in the morning. Not a lot of trades, just a couple out there, but a good day, and low volume again because of contract rollover. So try to get back in the game and get back onto doing videos as often as I can. If you have any questions, feel free to get in touch with myself or Al Mobus, and we're going to try to put together a webinar next week or the week after. So if you're not signed up for our email list, make sure you get signed up and you'll be notified in advance of the webinar. So thanks for watching. Have a great day.